Hey guys, it's Andy here from Learn How to Trade Online. We're going to have a look now at the Aussie dollar 4-hourly chart, and we're going to be looking at trend-based trading using price action. Seeing as this market's been in a strong downward trend recently, I'm going to identify some simple trading setups that you can use on any time frame. First of all, we've got the price action on the chart, and we've also got a 20 and a 50 moving average. Very simply, we're going to say when the market's moving down, 20 must be beneath the 50. Market's moving up, 20 must be above the 50. And we're going to go through and just look from this point in here, where we've got ourselves the 20 moving average crossing through the 50 moving average. We're going to go and identify some potential trade setups that you may be able to take in this downward trending marketplace. Starting off, first of all, we can see that we've got this strong leg down that then pulls back again to this 50% pullback. That means that prices pull back halfway or half the distance between these 2 points. This is the 50% level between these two. The prices pull back there, but that's not really the interesting part as to the exact 50%. The interesting part here is the level it's pulled back to. And we can see, if we just draw a line in of support becoming resistance, we can see that price is actually retesting the previous lows. So we've had price break through a level, pull back and retest it, and we've got ourselves a support level that's becoming resistance again. Now, there may have been a trading opportunity there, given the fact that we had that small little candle there. If I zoom in a bit closer, we can see it a bit clearer. With this tiny little candle here that may have presented a trading opportunity. But given the fact that we were looking at a weekend as well, going from the 3rd of the 5th to the 6th of the 5th, it probably wasn't a sensible trade to take there. Of course, you can look back in hindsight and say, oh, of course it was a trade. But realistically, it's Friday, the market's about to close, and it's very unlikely you go and place an order or place a trade there. So let's take that but move forwards a bit now. And let's just mark some of these levels that we've got on the charts. So we've got this support level that runs through here. And we can actually see that price has broken through that level nice and cleanly. And it pulls back up again here. Now, what's interesting is the 20 moving average is still underneath the 50 moving average. So we're looking for sell opportunities. And we've got ourselves price pull up to this horizontal level. And it's tried to break through it, failed, and it's being thrown back down through it again. So this tells me that there's actually a shift here from buyers to sellers. We've got buyer bar, big bullish candle, big buyer bar there, changing over to a seller bar. And that tells me that also with the fact that it's an inside bar, it's a bit of indecision at that level too. Price is likely now to reject this and move to the downside. And if we move through and look at this bar or candle at a time, we can see that the sensible entry there would have been to sell the low of this inside bar, because this is inside the range of the previous bar. Sell the low here with a stop loss above the highs, and we can see that we've been triggered into that particular trade. And we can see prices moving in our favour, and actually aggressively in our favour at this point in time. We'd be really happy with this trade, because given the fact that the risk was around 35 pips, and you're now up about 150 pips, it's a pretty damn good trade. As we look through this now, there's no way that we just leave our stop loss up here. We've been moving it down and locking in the profits as the market's moving down. We can see that a lot of people would have been tempted after this big move down here just simply to take the 100, 150 pips. The fact is, when you're trading, you really want to make sure that you're using a trailing stop loss. And I don't just mean on a certain number of pips, because that just doesn't work. You need to have a trailing stop loss based on the price action itself. Because if you're trailing your stop loss based on price action, you can then react to what the market's telling you. And ideally, you can run a trade for longer, or if the trade's going wrong, you can get out for a smaller loss. And if we look at this market that's still moving down here, we're actually now in a position where this trade is around 200 pips up, just over. And that's all come from a 35 pip stop loss, and it was very simple trading with a trend. And we can see, we looked at this first example, and some people would say you could have traded that, but with the weekend, I don't think you would have done. But moving on to the next example here, we can see moving averages are fanning out and separating. They're pointing down, the trend is down, support becomes resistance, technical analysis 101, and it's a great example of a trade there. That's a pin bar formation, and it's actually an inside pin bar formation with buyers shifting to sellers. That's the kind of thing that we look at Learn How to Trade Online, is price action with trend using support and resistance. And as we continue through here now, we see that this pin bar at the bottom here, this bullish pin bar, price is really starting to reject off that, and it's pretty likely to move back up again now. Price is overextended, and I'd more than likely kill the trade at this point in time, or at least move my stop loss down. So if my original stop was originally at around this level here, I'd be moving it down, 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 really just to try and lock in as much profit as possible. And you can see here price has actually gone to the downside again, and I've actually now been moving my stop down even further to lock in even more profits. And we now see we've got ourselves price actually creating another bullish pin bar here. Price is telling us it's trying to start to push to the upside now. There's not necessarily that much movement left in it, so we're going to keep trailing our stop loss, but we can see that we've got a nice strong move in our favour. And I've been moving that stop loss down once more, just locking in the profit. Because the price is moving in our favour, I want to be moving the stop loss in our favour. Another bullish pin bar is really struggling here at this point. There are definitely buyers turning up, but again, I'm going to be moving that stop loss just to lock in the profit that we've already made. And still going. I'd still be moving that stop loss, locking in the profits. And we can see here now prices broken through that little support level we had there, formed an inside candle and pushed back up again. We could be looking at the end here, and we've got more buyers showing up, and you can see that simply by the colours of the candles at this point. And there we go, there we have it. That's more than likely where you get stopped out there, as you can see. But looking at that, that's a 225 pip trade from a 35 pip stop loss. That's an incredible trade on any time frame, on any market, especially seeing as this took from the 9th until the 14th, particular week, but one trade made you a decent chunk of money there. Now, what's interesting here as well is we might actually have another trade set up off of this engulfing candle. If you have a look at this, we can just draw in a level of this support here. And we can see how this support level, where there were definitely buyers showing up, buyers showing up, buyers showing up. As we've got to that point, we can now see we can move this, and we've actually got this support level acting as resistance now. And buyers, buyers, buyers becoming sellers. This tells me this is a good opportunity here to sell, because we've got a resistance level that's formed from the previous support. Buyers try to show up, it hasn't worked, it's pulled back again, and the sellers are back in control. And there we have it, price is definitely starting to move back down again. We can see how our original entry would make sense underneath this engulfing candle here, stop loss up here, but as the trade's going on, I've been moving the stop loss, locking in the profits. The price is still moving in our favour. Still moving in our favour. You can see looking at that there, we haven't actually been stopped out yet. Stopped close a couple of times, but not actually yet stopped us out of the trade. And price is still moving to the downside, and as a result we'd keep moving our stop loss to lock in the profits as the market's moving down. Now looking at this here, this is quite interesting. We've actually got ourselves this support level that's formed. So we can take this support level here. We've actually got ourselves another bearish pin bar. So there's another opportunity here where we could get into this trend. We're actually adding on another position here because we're already in this trade, and we're quite happily up around 100 pips or so, 115 pips or so. We've actually locked in a definite 50 pips, and we're looking at another trading opportunity. So if price did move down from here now, we'd be looking to place another sell position. Price has started to move. We're actually able to have both of our stop losses now moving down, locking in the profits as the market falls away. Again, we're locking in our profits as the market's moving down. And we can see that all the way through here, it's been the support becoming resistance, support becoming resistance, support becoming resistance, and the price action that's given us these signals. Price is still moving to the downside, but looking at this, this is probably where I'd actually cut the trade now. I can see that buyers have shown up, and from this first trade of the two, we're up around 200 pips, and the second trade is up around 60 or 70 pips. And just over this entire run here, we've really taken over 200 pips off the first one, 200 pips off the second trade, and we're in a really healthy position here, having locked in that profit. And that's really where I'd look to kill the trade and take the profits that I've made. Of course, we've got another support level underneath here, and we'd be looking for additional sell trades as the market moves down. Looking at this, we can see the support becoming resistance here. We've got this lovely small little pin bar, and this would be a great sell signal now from this bearish pin bar. Again, price falls away, we're in the trade. We'd actually lose that trade. That would be a losing trade there. But while that's a losing trade, in pips terms, you've actually only lost 25 pips. Well, you've made best part of 500 pips. So losing 25 pips here really doesn't matter. But really, if we look at the price action here, we can see that the same setup still stands. We can see that we've got ourselves this support becoming resistance, a bearish pin bar, and we can see the market starting to fall away to the downside. And we can see here, as the market is moving down, we'll be looking to move our stop loss to the downside as well. So from where our stop loss is, we'll be moving it down, And when these buyers start to show up here, this is probably a good time now to actually kill the trade, because we'd be about 100 pips up. We've risked around 50 to 60 pips. It's a positive reward to risk trade. We're happy with the position that we're in. And looking at that, it was exactly the right call, because that's where you'd have then been stopped out. But hey, you can see this has been a very simple tutorial here on price action, support and resistance, and trend-based trading. If you want to know more about trend-based trading using price action and you're impressed with what you've seen, check out my website. It's learnhowtotradeonline.com. You can click the description underneath this video right now and go through and become a free member at Learn How to Trade Online.